Hello traders, you are welcome to this video and you're welcome back to the Forex Geek channel. Okay, if you are looking to sharpen your trading skills, then you are in the right place. I can assure you that. Okay, in this video we are going to be looking at a powerful concept known as the mean reversion trading strategy. Okay, so if you will, you might want to grab a notebook because you won't want to miss this. All right, now let's get started. First things first, what is mean reversion? It's good that you understand the concept, right? What is mean reversion? In simple terms, mean reversion is the theory that prices will eventually return to their historical average over time. Basically, that is what this strategy is based on. That is what the concept of this strategy is. That prices will eventually return to their historical average over time. This means that if an asset's price moves too far away from its average, it's likely to revert back to that average. Okay, for example, let's take a look at this chart, right? Okay, here you can see that when the price of an asset significantly deviates from its average, it often moves back toward that average. Can you see? Price does not move in a straight line. Price does not move in a straight line. There are always pullbacks. Can you see? There is always a zigzag movement. Can you see? So understanding this behavior can give you a significant edge in your trading strategy. So how can you identify when an asset is overbought or oversold? One of the most effective ways is to use technical indicators like the relative strength index. So we're just going to be adding the RSI to our chart. Okay, the RSI measures the speed and change of price movement, helping you identify potential reversal points. Okay, so when the RSI hits extreme levels, like the overbought levels or the oversold levels, it signals that the asset might be about to reverse. Okay, now let's move on to the implementation of a mean reversion trading strategy. Here are some key steps to follow. The first is to identify the average. So first of all, you have to determine the average price of the asset over a specific time frame. Now, for example, in order to make it easier, we can just consider using moving average to do that. Okay, let's just use the moving average. For example, this is the 50 EMA. All right, so you can use that to monitor the average price. So as price is currently above this moving average, based on this mean reversion trading strategy, we are expecting price to come down back at least at intervals. The price ought to be touching the moving average. Can you see? At intervals, the price kept on touching the moving average. The price kept on revisiting its average. Okay, so as price is currently above this moving average, the last time that the price touched the moving average was around here. So we are expecting that sooner or later the price and the moving average will touch again. Okay, we may not be able to specifically say when that will happen, but we know that at some point the price ought to revisit its average. Okay, now we have to monitor for divergence. Watch for when the price significantly diverges from this average. Okay, this is often where trading opportunities arise, right? And then you set entry and exit points. You plan your entry points once the price shows signs of reverting to the mean, and you determine your exit strategy to lock in profits and manage risk. So for example, as the price is currently above the moving average, when you start seeing signs, perhaps you see a bearish candlestick pattern form and you see the RSI in the overbought pointing downward, it could be a sign. It could be a sign that the price is about to revert back to its average. So in that situation, you can enter a sell once you confirm it with a bearish candlestick pattern and the RSI, and then you set your stop loss just above the high, and your take profit can just be at the tip of the moving average. Okay, so that's just it. All right, that's just it. So as you can see, applying the mean reversion trading strategy can help you capitalize on this price movement, but it's essential to maintain discipline and stick to your plan. All right, make sure you always use good risk management. Do not trade with an amount you can't afford to lose. Okay, and make sure that you use good risk to reward ratios. For example, if you're risking $1, you should be targeting to make at least $2. All right, if you're risking $100, you should be targeting to make at least $200. All right, so if you found this video insightful, please hit that like button and subscribe for more trading insights. Your support really helps us grow and bring you more content. So if you have any questions or you want to share your experiences with mean reversion, please drop a comment below and I would love to hear from you. Until next time, keep trading smart and stay informed.